continent, and over the next decade, its GDP is expected to rise by an average of 6% a year, not least thanks to FDI. FDI has gone from $15 billion in 2002 to $37 billion in 2006. But Africa has seen the boom before, only to crash land. Violence, corruption, and bad governance are still common. Are we seeing a false dawn once again? That was the question. How would you have responded to that question, Mr. Lipton?
I don't think it's on. I think at a great half. Much
All right. I have just a little technical problem connecting to Pretoria. I'm going to come back to you in a minute. I'll ask our technicians to take care of that, Mr. Lipton. Professor Ncube, how would you have responded?
I'm a lot more bullish, I think, than the Economist article, at least the way they framed it. I think this is not a false dawn, it is real. Africa has not been here before, in my view, having seen this kind of uninterrupted growth for quite a while, a decade or so. However, that doesn't say that there are no problems. We still have gaps in infrastructure funding. We still have to do a bit more on governance, dealing with corruption and violence and all those things, investment in skills and education, but making sure that this growth is not just driven by natural resources, the boom, oil and gas. It is durable, it is diversifies and gives the bulk of Africans an opportunity to work.
In your view, the only difference between this growth and the previous booms is what? Is the sustainability, is the 10 years?
It's the 10 years, it's demonstrating that it is durable, but also you're seeing a shift in the quality of economic managers managing these African economies, where they're looking at ministers of finance, governors of central banks. There's just a better quality of people running these economies, and I have full confidence in them, but there's still work to do.
Because they are, for instance, highlighting issues of violence, they're highlighting corruption, which still is a problem, and the fact that maybe we're just hyping this growth.
No. Certainly the growth is not hyped. I think it's something that can be sustained. We need structural transformation, which in and of itself is not an easy thing to do. It needs determined leadership, focused leadership, visionary leadership. But the growth can be sustained. I think the issue of corruption is there everywhere, but sometimes I think it's overstated. I think that certainly from the financial crisis, we're learning that corruption is not only in the public sector, but also in the private sector. So it's an endemic issue that needs to be dealt with. But certainly we need to do something on the governance front. We've made progress, though. Just looking at the number of areas of conflict, we've strengthened regional institutions that try to resolve conflict. It's not easy. It still keeps coming back. But look, I think progress is being made.
One of the things that you're talking about is that we've got to diversify, and Africa has, in a sense, been very slow in diversifying, moving from primary agriculture to the manufacturing sector, a thriving manufacturing sector.
No, I agree. We need to get this close to be inclusive, we need to diversify the economies and so forth. A lot has to do with, let's start with natural resources. A simple approach, trying to better manage the revenues from natural resources in the first place, launching sovereign wealth funds, then managing those sovereign wealth funds, appropriately. Some countries are trying. Botswana is a good example, and then deploying these resources either in national venture funds, investing those, so at least there's clarity, and the funds can support both recurrent expenditure now and also put something aside for future generations. In agriculture, it's not an easy area. It's tough reforming agriculture, but I think that it's fair to say without a kind of conferring title and dealing with property right issues in the sector, we won't move much on agriculture, in my view.
Right. Let me see if I can try Pretoria again and see if the first deputy managing director of the IMF can talk to me now. Please, Mr. Lipton, can you hear me? All right, we're sorting that out. We'll go back to him to get his thoughts around that. And by the way, Professor Ncube, just talking about the IMF, what has been their role on the African continent, do you think? Has it been a positive role or not?
It's been a positive role. Well, the IMF has done a lot, I think, in basically upgrading the quality of economic management in Africa generally in the last several decades. It's been, as you know, they are very strong on the stabilization, front in terms of getting economies to be stable and setting them up for growth. If you look at, for instance, what we do at the African Development Bank or the World Bank, we are much more kind of long-term structural investors in Africa, investing in infrastructure and roads, electricity, rail, education, and so forth. So we play different roles.
Sure.
The IMF deals with the investment climate to simplify it further.
And I want to talk to him about what's going on in Europe with the issues around austerity, because some people are saying that austerity has constrained growth, and then ends up affecting us. For instance, South Africa, our biggest trading partner, Europe, Eurozone is where it is at the moment, partly because of what the IMF has said over the years that they must be austere. Your thoughts on that?
Well, the austerity debate is a very contentious one, and I think even some academic work has been done recently, and there's been a lot of controversy over that. I think one thing is clear. I think it's not business as usual. Government has a role, and I think that government should do everything to get these economies out of trouble. But that doesn't mean that government can accumulate debt ad infinitum. It can't be as well. There has to be obviously some kind of ceiling. There's an extent to which governments can accumulate debt, so we have to worry about that. So there's a fine balance. I think it's not an exact science. One never knows where the cutoff point is, but certainly government has a role in terms of fiscal expansion to get.
I'm going to come back to what you said, your responsibility as the African Development Bank in terms of assisting with the infrastructure across the continent, because that clearly continues to be one of the biggest problems that we have in terms of linking different countries across the continent. We're going to come back to that. Let's go to Pretoria again, just find out if David Lipton can hear us now. Can you hear us, please?
I can hear you.
Oh, loud and clear. You are very loud and clear now. Thank you very much. I'm just going to take a step back then, get your response to that debate framed by The Economist, saying that yes, the past 10 years, there's absolutely no doubt that a lot has happened across the continent, and there are social indicators of that improvement, but the question is the sustainability.
Yeah, I don't think it's a false dawn. We've just done a study that was published in our World Economic Outlook that looked exactly at this question and said that the sources of growth in Africa should be sustaining. Certainly there are challenges because Africa has to deal with the slowdown in Europe and the United States, but we believe that there's such a diversification of activity in Africa that with the strength of emerging markets and continued progress on reform, Africa should continue to grow.
Diversification of activity, just give us examples.
Well, some years ago, most sub-Saharan African countries were exporting mostly to the United States and Europe, but now there's a much wider span of destinations for exports to emerging markets, and that's not just raw materials, but it's all sorts of products. And we expect that kind of diversification will provide protection and is a process that's going to continue. Moreover, African countries are trading more with a wider range of middle-income countries as well as the BRIC countries.
Interesting, because you raised that when you were in Mozambique on Monday, that Mozambique in particular has done well in terms of trying to offset the weakness in the Eurozone by coming up with other investment, export destinations. But countries such as South Africa have found it difficult. We're
Yes.
still, what do countries such as South Africa do?
Well, South Africa has probably suffered more than most sub-Saharan African countries because of the fact that it has a concentration of exports towards Europe, and I think it will have to look to diversify somewhat. I think that's one of the many challenges that South Africa has, but an important one.
And it goes back to the issue that I just raised with the professor now about the IMF's take on the austerity within the Eurozone and elsewhere, and what the impact of that has been.
Well, we've been very much on the side of this argument that countries have to support growth. I mean, as the professor mentioned, there's no question that the heavily indebted countries will have to consolidate their fiscal positions because you can't borrow forever. But what we'd like to see is for countries to make as many efforts as they can within the realities they face to be supportive of growth by having their budget adjustment, their austerity be gradual, and pursuing structural reforms and other kinds of policies that will be supportive of growth. And Europe itself, the European Central Bank, the European Union have to do all they can to support the countries that are having a difficult time within their union.
Do you agree with that perspective, Prof?
Yes, I agree. Absolutely. I think that, as I said earlier, governments have a role to play, but you cannot borrow ad infinitum. But it's also fair to say for Africa, the debt positions are the best we've had for decades again. So
Sure.
again, that speaks to how well Africa has been doing. It doesn't mean that African countries must now start accumulating debt. They just want to make sure that the current macroeconomic environment is maintained, but then promote private sector investment, both domestic and foreign, in terms of FDI, and then invest in these key areas of infrastructure that we talked about earlier, and try to make progress so that the growth is sustainable.
Let's talk a little bit about that, if we may, Mr. Lipton, because you have a country such as South Africa, and on the, I mean, I suppose if you wanted to divide this politically, on the left, you have unions that are saying, look, this whole thing about financial prudence, sometimes it becomes a little difficult because you've got other challenges that you need to address. How does South Africa deal with those issues?
Well, I think it's always the case that you have to do more than one thing at a time. You know, I think a clear lesson we've drawn from the whole world, but especially from the examples in sub-Saharan Africa, is that you have to keep your macroeconomy stable. If things get out of control, all the other important objectives, whether it's investment or job creation, can fall by the wayside. But there's no reason why South Africa can't keep its economy, macroeconomy stable as it's been doing, but pursue now the kinds of structural policies, infrastructure investment, labor market improvements, et cetera, that will create a better base for job growth and for the growth of the economy.
But let me ask you this, whether is there an agreement across the board about what macroeconomic stability looks like? Because some people will say, well, you know, you can't necessarily just be worried about inflation targets when in fact there is such a high rate of unemployment. Let me start with the professor.
Well, we've done some work actually which shows that the current inflation target of 3 to 6% in terms of the band is actually in the right direction. We're finding that actually the trigger point happens between 4 and 5%, so that at that level, then any inflation above that begins to be anti-growth, in fact. So it's important to have that kind of 5% line of sight as macroeconomics is being performed. There's no question about that. There are other things impeding growth in South Africa other than the monetary policy stance and the targeting approach. We talk about infrastructure investment. We talk about investment in skills and education. We talk about labor market reforms, but also things around competition. The cost of setting up business in South Africa is high, in my view. It takes a lot just to get going, set up a business. Even set up a business in the informal sector, you know, where you ought not to have problems. It's not easy for people to just set up a stall and start doing something, getting on with it. Those are the structural reforms, in my view, that we need to focus on. That's what will get a growth going. I think macroeconomic policy is on the right track, and certainly this monetary policy stance is the right one.
All right. Do you agree with that, Mr. Lipton?
Absolutely. I think that South Africa's problems aren't about generating demand from the government. South Africa's growth challenge is to improve the structure of the economy, the incentives to invest and create jobs, and as the Professor just said, to improve the skill base of the population that's coming into the labor force so that they can earn better salaries.
That's interesting because just again, yesterday we were talking about the unemployment figures. They came out. Stats SA said 100,000 jobs had been lost in the first quarter of this year. I suppose which is in line, Mr. Lipton, with what is happening in countries such as Spain and elsewhere in Europe.
Well, it is unfortunate that in the wake of the events here last fall, that foreign direct investment has fallen, the economy's growth has slowed somewhat, and that's led to some job loss. But again, the ups and downs in any one year are important. But what's most important is what's put in as a goal in the National Development Plan, which is to get growth to 5% or so. The difference between 3% growth and 5% growth in South Africa is huge and will make all the difference in the world in terms of the ultimate absorption of young people into the labor force, the creation of jobs, and rising living standards.